Hi everyone, in this video we are going to start analyzing depreciation. As always, we are going to start by looking at a simple example, and then we are going to build on top. So in this case we have ABC Inc. purchasing an equipment for $100,000. The salvage value is estimated to be 0. They purchased it on January 2nd, 2022. And they use straight line depreciation for 10 years, and the first question we need to estimate is the depreciation expense. So straight line depreciation, the way you calculate the depreciation expense is following. You are going to start with the historical cost. In this case it's $100,000. Minus the salvage value, it's 0, but I'm putting that explicitly there, divided by 10, which turns out to be 100,000 divided by 10, and it is $10,000. So our annual depreciation expense is $10,000. How do we record this on a on a 10-year horizon? So for PP&E we are going to record $100,000, and this is going to stay the same across the years. So PP&E is recorded at the historical, and it's going to stay the same across all the years. Our depreciation expense is $10,000, and since we are using straight line depreciation, the depreciation expense is going to be constant across all years as well. So for 10 years we are going to have depreciation expense of $10,000. Our accumulated depreciation is going to be the sum of previous depreciation plus that current year's depreciation. So in year 1 accumulated depreciation is $10,000. In year 2 it's $20,000, and so forth until year 10, where you have accumulated depreciation of $100,000. The PP&E net, in other words the book value of PP&E, is going to be the difference between the two. So PP&E minus the book minus the accumulated depreciation is going to give you the book value. So at the end of year 2022 your book value after depreciation is going to be $90,000. And at the end of 10 years, the book value is going to be 0. And that's what we are trying to achieve. Now let's take a look at how we are going to record these transactions actually. So PP&E is going to be 100,000 when we purchase it. By the time we do this debit entry, let's do this, PP&E historical cost 100,000. By the time we record this entry, this is a debit entry. We need to credit, depending on whether we buy cash or by liability. Let's assume we are buying it cash, so it's going to be 100,000. If you purchase it with a bank loan, then this would be a liability account, but the credit entry will stay the same. Accumulated depreciation, on the other hand, for a year 2022 it's going to be 10,000, and for year 2023 it's going to be another 10,000. So you are going to record accumulated depreciation, and accumulated depreciation over time is going to increase. So by end of 2023 your accumulated depreciation is 20,000. And this question here is, what is the book value of equipment by December 31st 2023, which is basically what we calculated. The book value is the 80,000 here. That's the net after depreciation. Or we can look at the T accounts and say this is the book value of that particular equipment minus the depreciation. We are going to get the 80,000. Let's continue with the depreciation expenses 2023. Since this is a straight line, the depreciation expense in 2023 is going to be the same as the other years. So it's going to be $10,000. And we are eventually going to write PP&E, gross and accumulated depreciation balances as of 2023. Gross will stay the same at 100,000. Accumulated depreciation is a negative balance. In 2 years, it's going to be negative 20. Net PP&E is going to be the sum of the two. Hope this helps. We are going to continue with this exercise with a bit more complicated examples.